Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. Looking at Bitcoin to the US dollar, one-day chart on Coinbase. And when last we spoke, Bitcoin was actually, I'm going to zoom in here to the 4 hour. Last we spoke, Bitcoin was operating right in here at about right below this $10,650 resistance. I did tell you that if we did break above $10,650, we'd very likely test between 11,000 and 11,050, this area right up here. Conversely, I said that we were bouncing between 10,400 and 10,650. I said if we broke below 10,400, we'd very likely come down and retest it. Retested, if I can speak proper English here, and test somewhere between 10,100 and 9,000. $9,950, this area down here. We actually had both. We had a bit of a stop run. So price broke to the upside about 12 hours after my last video, and we did come up and test about $11,000. Stopped short of 11,050, but coming up testing almost about $11,000 and then getting rejected. Came back down. We did end up decisively breaking below 10,400. As soon as we broke below 10,400, that was your signal, as we talked about, to come down, and very likely Bitcoin was going to come down and test between 10,100 and 9,950. And while we did get a bit of a bounce here, bit of a fake out here, price did end up doing that. Did come back down and tested about $10,050. Not quite making it down to 9,950, testing about $10,050. So that did hit our target between 10,100 and 9,950. Price did bounce a bit off there, rejected again right around 10,400, and we find ourselves now sitting down at about $10,200. Does look to me like there's a good chance Bitcoin comes back down to possibly double bottom somewhere around 10,100 to 10,000, somewhere in this area again, and then it looks like it may want to bounce. Now we'll have to wait and see. This is a very, very iffy call. If you're looking for a scalp, in fact, I do have a couple of very small buy orders sitting here between 10,100 and 10,000, or excuse me, and 9,950. Now they're very, very small orders here, guys. We'll have to wait and see how it plays out, but I am looking for a bounce in this area, and it may bounce right here. They may even not get filled. We'll see. But it does look to me like Bitcoin, if I zoom in here and look at this microstructure here, it does look to me like Bitcoin is painting a bit of a falling wedge here, which is typically a bullish pattern. Now again, we're only looking at a very, very small microstructure on the 4 hour, so I'm not putting a lot of weight onto this, or a lot of weight on this, but this does look like a falling wedge here, which again does look to me like we may come back down, test that area somewhere between 10,100 to 10,000, and then get a bit of a bounce, and a measured move off of this thing would bring us up to about 10,600 to 10,550. Somewhere in this area would be the measured move off of this. If you're looking to play this, I wouldn't wait for that. I wouldn't look for the full measured move. I would get out somewhere around 10,400, very likely, maybe even 10,350. That's the area that I would look to get out, because this thing has been so manipulated, guys, and market makers, we've seen them just constantly stop hunting, constantly trying to trick people into going short, going long, and then just liquidating that position shortly after. So there's a lot of games being played, and the truth is, until we break out of this, zooming out to the daily, until we break out of this overall large consolidation pattern that we've been watching for the last couple months, it really is a crapshoot. And I know that's frustrating to hear from an analyst, guys. Bitcoin, the overall thing could get resolved to the upside, could get resolved to the downside. That's brilliant. I get that, but that's where we are right now. Now, there's no question, as we discussed in my last video, there's no question we're in a overall descending triangle. An overall descending triangle is historically a bearish pattern, which means that probability would favor a break to the downside from this overall larger structure here. That being said, as we talked about in the last video, guys, we are still in an overall macro uptrend, and we have been for the last 9 months or so. There's no question about that. So as we discussed on the last video, in a macro uptrend, when you see a descending triangle, the probability of breaking down is substantially less than if we were already in a downtrend. And again, that difference is somewhere around, since we're in an overall uptrend, we've got about a 55% chance of breaking down, which means there's about a 45% chance of breaking up. Which means there's a good chance of breaking to the upside. Even though probability favors down, there's a good chance of breaking to the upside. Now, if we were in an overall bear market, that would change substantially. That would be about a 65% chance of breaking down and about a 35% chance of breaking up. That's not what we're looking at. We're looking at about a 55% chance of breaking down, about a 35% chance of breaking up, or excuse me, about a 45% chance of breaking to the upside. So a substantial chance of breaking to the upside. The question is, and I think most people are drawing this descending triangle the way that I've got it drawn out now. And if this is in fact the case, we very, very likely have about at least another month, if not 2 months, before we're going to break out of the overall descending triangle here. In other words, we'd be looking at coming to an apex right around here. which again puts us at about another month before Bitcoin does break out at the earliest, if this is in fact the case. I'm not so sure this is the case. And in fact, in my opinion, guys, based on the last weeks of price movement, this breakdown here, based on this the last week price movement here, it does look to me, and I discussed this possibility on my last video. If I'm more of a purist and I draw this thing from more of a purist perspective, and I go from the ultimate swing high from this pattern here, which would be this wick right up here at about $13,850, and I draw it based on that, and I hide this right here. Let me just get rid of this to avoid confusion. This has us coming to an apex within the next week or two. This has us in an apex somewhere in here. In fact, we already be in that area where we could see that larger move anytime between now and the next week or two. And it does look to me like there's a good chance that that is the correct way of drawing this, especially after this last week's of price movement. Now, what will invalidate this is if we do break up above 10,650, which would bring us above this descending resistance line of this potential descending triangle. And if we do break above that, but stay within the overall descending triangle that we had drawn, in other words, we stay within this descending triangle here, and that would bring us that would keep us below about 11,000-ish, somewhere thereabouts. Then yes, we may be looking at much more consolidation and much more sideways movement. But again, until we break above $10,650, it does look to me like there's a good chance that we could break out at any point in time. And in fact, if I come over here and I look at the daily chart, and I look at our daily 8, 21, and 55-day EMA, they're literally basically right on top of each other now. You very rarely see the 8, 21, and 55-day EMA this compacted on top of one another, especially when you've also got the daily Bollinger Bands this bottlenecked. Now, we haven't seen Bollinger Bands bottlenecked like this in the 8, 21, and 55-day EMA, this on top of each other, since this breakout on April the 2nd. So this is suggesting a much larger move to come sooner rather than later. By sooner, I mean the next week or two. And again, I know I've been saying that for quite some time, but look at the 821 and 55. They've been basically just getting squeezed tighter and tighter here within a range to where now we're literally at the tightest it's been since April the 2nd. I mean, and we've got the Bollinger Bands bottlenecking to support that. So again, this very much suggests obviously the range is getting tighter and tighter, prices are getting squeezed tighter and tighter. But when you see the 821 and 55 doing the same and the Bollinger Bands bottlenecking like this on the daily, again, that does suggest a breakout coming sooner rather than later. Let's check the weekly. Looking at the weekly, we are still snaking around the 8-week EMA here. So basically just more consolidation. And the weekly would suggest, if we do break down, would suggest dropping down to at least $9,200. And that'd be the area that I'd start to look for a potential bear trap. But I do think, as we discussed last time, if we do break to the downside here, and if it is a bear trap, if it's a measured move, we're going to come down to about $7,000, maybe the upper $6,050, or excuse me, the upper 6,000s, maybe the lower 7,000s, but somewhere around $7,000 would be the measured move off of this thing. That being said, as we discussed before, guys, $8,500 to $8,900 would be the area I'd be looking for that potential bear trap reversal, where it surprises everybody. Everybody's going short and price just completely reverses course around $8,500. Why $8,500? Well, because we've talked about that numerous times in the past. But looking back at the CME chart here, guys, we can see that $8,500 is exactly where that gap is, as we've discussed numerous times in the past here, and typically we know the gaps want to get filled. So and also we know that gaps also oftentimes provide areas of support. So coming down, hitting this area, this gap, and then bouncing off that area would not be out of the realm of very strong possibilities. We can see this a gap that we had here between 10,100 and 10,400 did get filled. So that's no longer the case, but this also would support the potential falling wedge on a micro level here in price, bouncing off this area about 10,000 to 10,100 and coming up and retesting about 10,500-ish, somewhere thereabouts. The fact that we have now filled this gap, and it does look like price is finding some support there, would support a falling wedge on a micro level, as we just discussed. Checking our daily RSI. Daily RSI is having trouble breaking up above back into the a bullish area, guys. It's just bouncing right off the top of that 53 area that we've discussed numerous times in the past. Remember, right around 52.9 to 53, that has been in the past a very, very relevant area. It's acted as an area of resistance in the past during the bear market, acted as an area of support during the bull market, and of course we can see that when price did break down below here, again it rejected right there again, right around that 53 area, rejected again a little bit higher this time, but somewhere right around that 53 area, and this just recently over the last couple days tried to break up above it again, was unable to, and rejected. So this is until we get up above 53, and hang out up above 53 on the daily RSI, guys. This is just indicating more sideways movement until we really can get above this, guys. I just, obviously, prices is showing a lack of strength, and we can see that lack of strength with the daily volume. Daily volume sitting at about 14.6 billion, very, very, very weak, basically, and has been for quite some time. You get very, very, a couple of days, you'll see the volume spike, and then it just drops right back down here. So, until we see volume spiking well above 20 billion on a consistent basis, for at least over a week or so, this is just indicating a lot of people just sitting around on their hands waiting for resolution from the overall descending triangle pattern that we have been in. All right, coming back to the RSI, looking at the weekly doesn't look bad. Weekly is still sitting right above that 53 area, which coincidentally or not so coincidentally is still relevant on the weekly RSI, just as it is on the daily RSI. That area acted as strong resistance during the bear market, acted as strong support during the bull market, acted as strong resistance again during the bear market, and then finally when we broke up above it, looked like it wants to act as support. Now, to be fair, we haven't come back down and tested it completely yet. We'll see whether or not it does, but as of right now, this doesn't look bad on the weekly. On the daily RSI looks a little bit weak. The overall weekly RSI, though, still showing some strength as of right now. Zooming all the way out on the weekly and getting rid of most of the noise here, these represent, you can kind of visually see the major areas of support and resistance that we're watching. Obviously, we're getting basically just sideways consolidation, have been for the last couple months here. Breaking up above on the weekly above $11,500 is going to be very significant. If we can close a weekly candle above 11,500, I do think, and I know I discussed this last time, guys, but it's been a little while, so I always want to make sure I'm reviewing my positions. Also, it helps me keep myself accountable to what I tell you. So if we break above 11,500 on the weekly and we get a weekly candle closing above 11,500, I will think that is a good indication that price is very likely going to continue to the upside here, and I'd be looking at a target of at least this prior high right around $13,800 to $14,000, but I would think that very likely that would get taken out. If we do test that again, I would think it would get taken out, and very likely if it does, that would bring us all the way up to the next target, which would be around $16,100, this area right here. And of course, we know that, as we discussed before, if I look at the ultimate swing high to the ultimate swing low, that does coincide very, very nicely with the 50 Fibonacci level. Next major fib level would be right in between that golden pocket between the 618 and the 65 fib level, which would bring us up to around that $14,000 area. And the next major fib level above that is the 786, which again would bring us right around to that $16,100 area. So we're seeing a lot of confluence between not only visual areas of resistance, but also confluence with the areas of resistance on our fib level from the ultimate swing high to the ultimate swing low, which means those are very, very, very logical, very good areas to be watching. Now, to the downside, if we do break down below 9,000, we can see there's a nice visual support right around 9,000 that I do not have marked, that I will go ahead and mark off right here. Right on, there we go. We can see that that's not where I want it, right? There we go. We can see that that's where right here where price was rejecting at that $9,000 area. Price turned from from resistance right into support. So this 9,000 area is a very relevant zone. If 9,000 does get broken, I will be looking for a drop to at least 8,500. We can see. Oh, sorry guys, we can see 8,500 was the prior area of resistance. Resistance turned into support, and that's also that gap. So if we do break below 9,000, 8,500 would be the first area I'd be looking for a potential reversal, potential bull trap bounce, bear trap bounce. However, if 8,500 does get broken, guys, then we're looking at a drop down to about as we discussed, the upper 6,000s to the lower 7,000. We'll call 7,000 to basically split the difference, and that's going to put us right in here, somewhere in this area right here. Now that's a must hold in my opinion. If that does break, we're very likely going to come down to much, 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 much lower prices. This is kind of the last stand, and this area does need to hold if we do come back down here, and I expect that it would. I would not be looking for this area to break. We can see that was an area of support down here, or excuse me, resistance turning into support. That was that major flip that brought us all the way up to $14,000. So those are going to be my targets to the downside. 7,000 will be the bottom of my target, and to the upside, guys, as I said, we'd be looking at 11,500 needs to get broken, then 14,000, then 16,100 to the upside here. Again, doesn't mean if we do break below of 11,500, doesn't mean we're just immediately going to head on up, but I would expect if we do get that decisive break, now we've broken it in the past, I want to make sure I say decisive. If we get that decisive break on the weekly, which in my opinion, if we got a weekly candle closing above 11,500, that would be a decisive break. If that does happen, then I'd be looking for that continuation to at least 14,000, if not 16,100. All right, so going from the macro, zooming back into the micro here on the 4-hour chart to wrap this thing up. How would I play this? Again, it does look to me like we're in a potential falling wedge here. This does look like a decent setup. Again, this is not a guaranteed trade, but there is no trade that is guaranteed, right? So if you're looking for a very, very small scalp trade, it does look to me like we may get a little bit lower prices here, somewhere around 10,100 down to about 9,950, somewhere in this area. I'd be looking for a bounce, and I'd be looking for a measured move off of that, some to carry us up to about 10,600 to about 10,500, somewhere in that area up here. However, I wouldn't, if I was scalping this, which I do have orders down here, we'll see if they get filled. If they do get filled, I'm going to very likely get out at about $10,350. I would get out somewhere around 10,350 to 10,400. I would not wait for the full measured move up to 10,600. I would not wait for that. But again, I'm not a financial advisor. You do what you want. This is not financial advice. But that being said, I have a very tight stop, because if $9,950 does break, and there's a good chance it does. If it does break, I do think that we're very, very likely, if we get a 4-hour open and close below $9,950, I will expect a continuation down to about 9,400, and we'll have to wait and see how price reacts at 9,400 if and when it does come down the low. 9,400 does get a decisive break below, then we're looking for that target between 89 to 8,500. But we're nowhere near there yet. Don't want to get ahead of myself. If we do break above $10,650 to the upside, if we get a decisive break above $10,650, I will look for continuation. First of all, that will then invalidate this descending triangle here, and at that point we'd be looking at a very likely continuation of sideways consolidation for probably another couple months until we do take out $11,050. If we get a 4-hour open and close above $11,050, then I will be looking for continuation to 11,500. Now that could potentially be a bull trap. But if we do break above to 11,500, if we get a 4-hour open and close, but actually, you know what? I take that back. If we get a weekly close above 11,500, as I said, I do think continuation to the upside. However, if we just get a temporary break above 11,500 and we do not break above 12,000, then I'll be looking for a potential bull trap. So really, we need to see a 4-hour open and close above 12,000 before I will be comfortable going, before I will be comfortable saying we're going to continue to the upside here. Either a weekly close above 11,500 or a 4-hour open and close above 12,000. One of those two will make me comfortable that we'll very likely continuing to at least 13,800, at least testing this prior high here. But again, we'll have to wait and see kind of how that ends up playing out here. But I would not count out a potential bull trap. In other words, just like we can see a bear trap where price breaks down, reverses at 8,500, we could just as easily see a bull trap where price breaks up here and then reverses course somewhere between 12,000 and 12,400 and then just dumps. That's a very real possibility. Remember, guys, the name of the game here is a lot of manipulation. Market makers, there's not a lot of guppies in the market the way there used to be. In other words, back in 2018, it was very, very, very easy. If we just come back out here to the weekly chart, we can see back in 2018, it was very easy. There were a lot of guppies in the market. In other words, we were just seeing price dump, come back up here, all the market makers would get out, dump their positions, and then price would tank, and then all the guppies were left holding their bags all the way down, until it finally bottomed out. Everyone would sell, market makers would buy down here, push the price up again, market makers would sell here, guppies were holding the bags all the way down here, and this just continued until finally everyone just got out and price just collapsed here. It's not that easy anymore. There's no longer the guppies in other words, all the retail, if there is any retail left, they're much smarter than they were back in 2018, which makes things a lot more difficult for those that are trying to manipulate this market. So this is why I say, do not go all in on anything. Make sure that you've got a certain amount of money set aside for much lower prices, because that is a very real possibility. It's a very real possibility. It doesn't mean it's going to happen. It's just a possibility. And if it does happen, you want to make sure you've got fiat set aside to take advantage of that. That being said, it's also a very real possibility that we could be looking at a bull trap, a nice little bounce off this area where price breaks to, or excuse me, a bear trap where price breaks to the downside and then completely reverses course here. So that's also a very real possibility. And I know that's frustrating to hear from an analyst, guys. I get it. I know how frustrating that is. But either I can blow smoke up your ass, or I can just be completely honest with you and tell you how I'm trading the market. And personally, yes, I will have buy orders sitting between 8,500 and 8,900, but those will be, that's going to be about maybe 20% of the overall money that I have set aside to buy Bitcoin. Will be looking for a buy in that area. I'm going to have about 80% of the money that I have set aside to buy Bitcoin, ready to buy at that $7,000 range, somewhere between 7,100 and 6,900. And I will have at that point, I'll probably only deploy maybe another 20% in that area. So I'll still have about 60% left for much lower prices. So it's always better to be conservative, guys. Just because you don't happen to catch a trade does not mean you lost money. Losing money is losing money. Just because you didn't catch a trade does not mean you lost money. And the name of the game should be protecting your capital, because let's say worst case scenario, this thing just takes off and you don't have any position in. That does not mean you won't be in a position to take advantage of, price when it does continue to the upside, and I do believe that it will. Even if it takes off, even if it does take off here and you don't take advantage of that, there will be pullbacks and there will be opportunities to take advantage of the price going up in the future. So, make sure the name of the game should be not losing money. The name of the game should not be, am I going to catch every single drop and every single rise? No, that's not how you play. The name of the game is protect your capital and live to fight another day, always. Now, anyway, all right, I'm rambling now, guys. I know you guys aren't kids, so I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, I'd appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe, take care of yourselves. Please remember to like, subscribe, hit that notification bell on the bottom right-hand side. Anyway, until next time, take care of yourselves. This is Working, signing out.